Welcome to Decoding Financial Markets, brought to you by the CTKS method for Forex, yields, stocks, commodities and crypto. Here you'll learn about markets at the institutional level. Let's run the numbers. The markets today are changing really quickly. We're going to look through the cheat sheet as of UTC 10 AM 20th of February. What we can see is that the amount of fear and greed inside the main markets is at elevated extreme greed measures. The crypto fear and greed index has fallen. We can also see there are about 29 days before the next FOMC meeting, and right now the percentage probability of a rate cut has gone down from 10% to 8.5%. This is putting positive pressure on the US 2-year yield, the US 10-year yield. It's negative for gold and silver and commodities in general. But it's really positive for DXY and DXY orientated pairs such as the dollar-yen combo, but it's very negative for the euro dollar, the Aussie dollar and the Great British Pound. As of the timing of this recording, total crypto market cap was coming up, but Bitcoin was staying in a consolidation case. We've seen Ethereum do very well. Since the 1st of January, it's up nearly 30%. BNB, XRP have positive momentum. ADA and Doge also have positive momentum. Unfortunately, Solana has a bit of negative momentum, as does AVAX. This positive momentum was on the back of a lot of short liquidations, which we saw inside the crypto market. One thing to keep in mind, when the markets open, there is negative price momentum on the S&P 500, the Nasdaq. Also, Apple is under negative price momentum, as is Tesla, and also Microsoft. Nvidia has been doing incredibly well. Since the start of the year, it's up nearly 50%, but it's currently consolidating. MicroStrategy is up 2.1% since the 1st of January, and the price action from the momentum side is a little negative. In 3 days, the FOMC meeting minutes from the last meeting are coming out. Also, the unemployment claims, the flash manufacturing and services PMI are also due out. That could rock and roll the markets. Let's have a look at the futures for the main market. We can see the S&P 500 futures are under negative price momentum, as are the Nasdaq futures, the Dow futures, and the Russell futures as well. The DAX is under a bit of negative price momentum, as is the Nikkei 225. You can see the blue line behind all of these charts. That is Bitcoin's price action. You can see Bitcoin and the main markets are quite correlated. Turning to the Forex pairs and a bit of government data, we can see that the DXY, the US dollar currency index, is starting to regain a little bit of power here. We wouldn't be at all surprised if it starts to move up. We can also see that the dollar-yen combo has been seeking to break out. It's just gaining momentum as it goes. Of course, there is always the case that it will come down, and we have to do our three-dimensional risk management. When it comes to the 2-year yield, this is on a bit of a rampage, and the 10-year is on a rampage as well. When the DXY comes up, we expect the Aussie dollar and the euro dollar to get hit, and that's what we conventionally see. We can see at the current time the DXY has been going down, where the Aussie and the euro dollar have been coming up, but you can see some weakness developing here. This may be just a retracement with a further move up. If this is the case, we would expect the Aussie dollar to go higher and the US dollar to go lower and the dollar-yen combination to go lower as well. Everything is intercorrelated and interconnected. It's vitally important that you know how. When you first get into financial markets, it can be really overwhelming as to what charts you need to look at. The answer to that, you need to look at the Tier 1 charts, especially their structural levels. It's one thing to get the direction and the association between charts, but if you don't know the SLs or the Stanfield levels, the levels of structure, you're just guessing. If you're guessing, the markets will mercilessly take your money. The purpose of the cheat sheet is to put all the Tier 1, Tier 2 and Tier 3 charts together, as well as the this month only indicators, and you can see the this month only are highlighted in grey, but the Tier 1, Tier 2 and Tier 3 indicators stay from month to month. In order of priority, you should be looking at the Tier 1 charts absolutely first. They are the most important ones, and they just get confirmation signals. For example, the DXY can gain confirmation from the Euro dollar and the Japanese yen. Also, you can often see what's happening between the yields, the US 10, the US 2, by looking at silver as well as gold. They can give you yield-sensitive data, as well as looking at the major stocks from the Magnificent 7/6. When you've mastered the direction of different charts and you know how different charts intercorrelate and interdepend on each other, you're ready to go to the next step, which is to understand structure. Structure is vitally important. For example, when we look at Ethereum, as of this particular date and time had structural support below the price. That's very important to understand. Also, Microsoft is coming into an area of structural overhead resistance and has a negative fresh air gap. That could mean that Microsoft could fall quite significantly. But Apple is considerably different. Apple is coming into an area of structural support. Direction is one thing, but the structural levels give you so much X-ray vision into the market. Everything gets easier when you understand how different markets move. One of the things that you want to keep your eye on if you're in the crypto market, as Bitcoin moves up, which is again that blue line. As the blue line moves up, you would expect the alts to move up with it. This is something that you want to keep your eye on, paying close attention to it. We're getting some really interesting concepts that are emerging at the moment. You can see Binance Coin, BNB, is just trying to do a cut over. It's trying to consolidate and potentially push upwards higher. If that actually occurs, it would be because Bitcoin is also going higher. Keep that one in mind, it's important. And that could throw some really good positive price momentum on Ethereum. We would also expect Solana and the other alts to follow suit if this actually occurs. If the DXY gets too strong, we would expect negative price momentum. That's why it's important to know where the Forex pairs are going, as well as the S&P 500, the Nasdaq, the DAX, the Nikkei. We've seen ADA, Cardano do incredibly well recently. It's just been consolidating since that big push up, and XRP has, as we anticipated, done quite well. It's starting to spike up as we speak. AVAX is the bit of the laggard at the moment. That's actually going down, and Doge has surprised everyone by letting the dogs out. Let's have a quick look into XRP structure. XRP has been trading in excess of 3,700 days. Let's pop on the indicator and I'll interpret this for you. XRP was coming up to this 5,500 level of structural once resistance, but it was managing to get over it. If it gets over it, it's going to the next cluster of SLs. When there's a quite substantial clustering of SLs, we expect a bit of a pullback because that's the nature of strong resistance. These SLs here, or Stanfield levels, they mean that a lot of sellers are going to come in around this 5,600 price, just up to 5,630. So with a lot of sellers seeking to push the price down, there's often a fake out before things get going. And we always know if we make it through these particular levels, and after those fake outs, they're very common, we're coming up to the next level of structural resistance. You'll see it time and time again. The price will reflect where the structure is taking it. You can learn how to draw these SLs or Stanfield levels through CTKS Method Standard Certification. There are two levels of standard certification, Level 1 and Level 2 standard certification. You can find out more about it at ctksmethod.org. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.